If you're trying to get your taxes done early, there's usually one thing you're stuck waiting on, and that's your tax slips. Filing too early without the right tax slips can cause delay, missing income, and future problems, even meaning you might have to fix your income tax return later. I'm Stefan, a CPA here in Canada, and I'm here to help you navigate during this difficult tax season. In this video, I'll break down the main tax slips Canadians are waiting for, what they mean, and when you can expect them so you're not left guessing. So the first thing we're going to talk about is your T4 slip. So this is your slip from your employer for any employment income that you make. So the T4 slip is a very important slip for many Canadians because many Canadians are employees that work for someone and will receive a T4 slip from their employer. Now, on your T4 slip, you will have information regarding your gross income, your tax withheld, your CPP, and your EI, which is very important for you because the amount that is withheld is usually more than how much is actually necessary, and then you will get a refund from the government. So when you go on the Canadian government website, the CRA website, there's good information about what the T4 slip is. They tell you about all the different boxes and what they mean. Okay, so if you weren't sure about a certain box, you could go down and find what that box is related to. And of course, there's a lot of boxes on the T4 slip because there are certain taxable benefits you receive from your employer that is not just related to your income. So, for example, you may have meals that are given to you. You might have a gym membership that would also be taxable for the most part. There are some rules revolving around that, but for the most part, that could be taxable if your employer deducted that on their side. So you can see this is how the T4 slip looks like. You have that information that's most important to you. Who is your employer? Your name, your SIN number, making sure that's correct. The amount that is gross income, gross employment income, your amount income deducted, your T4, your EI, and your CPP payments. That's the first slip. And in this slip is generally, it needs to be done by your employer by February 28th or the last day of February, whether it's the 28th or the 29th, meaning that you will get this slip sometime in March. Okay, so you won't be able to file your tax return until you are able to get this slip from your employer, which is from March. Generally, you'll get it in March. You won't get it before because in general, you might get it before, but it depends on when your employer actually ends up filing it, but they have till the last day of February. The next slip here is your T4A slip. Okay, again, you can go down and see and have information. So the T4A slip is generally other income that gets caught. So for example, you might be a contractor and you worked as a contractor somewhere. On each contract you earned income, you would need to get a T4A slip from that person that contracted you out. You would also need a T4A slip would be issued to you whether you withdrew from your RRSP. So that would be income from a pension. So pension income is also a T4A slip is also given to you and issued to you if you have any pension income. And this could also be under certain rules around bursaries and scholarships. But for the most part, those ones are exempt, but with certain qualifications. But there are certain times when even bursaries and scholarships will be taxable, but for the most part, they aren't. So this is how your T4A slip looks like. Very similar to your T4, except way less boxes. Again, your income tax deducted, your different types of income, whether it's pension, contract, lump sum payments, anything like that, will be shown on your T4A slip. You would also need this slip when you're filing your tax return because, again, if you had pension income, that will be taxable for sure. Here you can see the T5 statement of income. Again, this is a very common tax slip, just like your T4. If you're a person that has investment income, whether it is from a savings account, from dividends, from stocks, whether you buy, sell, maybe you have an institution that trades on your behalf, right? And then they end up buying and selling stocks and they hold stocks that have dividends. Then you will have this statement of income. Just like if you had a savings account, you would also have it. They would also issue a T5. So for every account that you have, whether it is, maybe you have 5 different savings account from 5 different banks, each bank will issue a different T5 slip. This slip is meant to be a catch-all for investment income for individuals. So if you have any sort of investment income from stocks, that would be caught here. Again, this is not from a trust. So if you had a trust and there was income from a trust, that would come from a T3 slip, okay, which is different. So, but for the most part, you will see a lot of T5 slips being issued if you have investment income. So you'll have interest income from Canadian sources, you'll have capital gains, dividends. So that's just if you had any capital gains from an institution that trades, this will be recorded as capital gains dividend and treated as capital gains. You also have the amount of eligible and ineligible dividends that you would need to show on your tax return. So this slip is due last day of February as well, from your bank or whoever is issuing you the slip. They have until the end of February. So you wouldn't be able to, in theory, file your tax return without having to report this income. So in the most part, you'll have to wait until March to get that. Again, this is your T3, so it's the same thing like your T5, except it comes from a trust. So if it comes from a trust, again, when you invest with RBC, BMO, any other type of bank, they might invest in a trust, okay? And then your income won't be from stocks in theory, it'll be from a trust that owns these stocks, and then you won't get a T5, but rather you'll get a T3. But again, that will fall on your bank, so you don't have to worry about that, other than you have to know that any slip that you get, whether it is T5, T3, T4, T4A, you will have to report that on your income tax return. You can't just ignore it. Very important that you report that on your return. Also for students, you will get a 2202 slip. So this is your tuition and enrollment certificate. Again, if you were enrolled in a university and you paid tuition, they will issue you a slip which you can actually deduct from your income. Okay, so it'll save you tax. It'll actually save you on taxes. But again, this isn't a slip for showing, making it more taxable, but rather this is for you to reduce it, and you'll get a credit when you have this slip. Okay, so you'll get a donation, you'll get a tuition tax credit on your income tax return, and it will reduce your income. And the last thing, again, is talking about the RRSP. If you have any withdrawals or if you contribute, so if you withdraw from your RRSP, you're going to have a T4A slip issued to you. If you contribute to an RRSP, you will also have an RRSP slip issued for you as well. So depending on when you have the RRSP contribution, it'll most likely be by March 31st, you should have that RRSP contribution slip issued to you. But again, that will be on the bank. So these are things to think about with all the different slips, T4, T4A, T5, T3, 2202, which is a credit. So all these other ones are showing to increase your taxable income. This will reduce your income, your taxes paid, because it'll be given to you as a credit for tuition. And then again, your RRSP, whether you contribute or you withdrew, depends on whether you'll get a T4A slip or an RRSP contribution slip. In my next video, I'll explain to you whether you can still file a tax return without all your slips, and what to do if you're still waiting on your T4 slip. Subscribe for more Canadian tax clarity.